Hey, and welcome to July Tax Tuesday. I am the tax queen. My name is Heather Ryan, and I own the tax firm called the Tax Queen. And I'm here to support digital nomads, RVers, and other nomadic business owners and other tax matters. And I realize this is a holiday week, the 4th of July. I hope you're having a great summer so far. And I did get a few questions, so I'm going to go ahead and jump in. If you are here live, give me a thumbs up or a hi. I'd love to know where you're coming from or where you're joining from. I'm currently traveling in our van this for the summer. And so the background here is a little different than some of my other videos in the past few months. And we're parked in beautiful Central Oregon in the forest. And yeah, I'm going to go ahead and get started. So first question I have is let's see. Oops. We've been self-employed for a while, but we are full-time retired as of July 1st. Congratulations, that's awesome. And we still need to be making quarterly estimated payments for our self-employment for the rest of the year. So first question, no. If your self-employment taxes have stopped or self-employment income has stopped, then your self-employment taxes can also stop as long as you've met your obligation for the year. And then they're continuing on because they're starting to pull from retirement accounts and getting Social Security. Um, and how is it basically different as you're self-employed and then moving from self-employment to retirement income? So um, yeah, basically, as long as you're meeting your tax obligations and you're withholding, if that's necessary from retirement, that's fine. Um, you're as long as you're keeping up, right? The whole point of estimated taxes is that you're keeping up with your estimated payments, and so your tax liability throughout the year, because we have a pay-as-you-go system. So if that's the case and you've met your obligation or you're withholding taxes from that retirement or Social Security income, then you know then that's great. You should be caught up. Um, I hope that answers that question. If you have follow-up questions to this, as I'm giving answers, please jump in and leave them in the comments. I do see a couple people. Hi from Durango, awesome, and from North Alabama, very cool. So I bought a new RV. Our county state taxes and registration fees deductible. Um, this is part of your itemized deductions. So not registration fees, but any kind of property tax would be part of your itemized deductions. And with that being so high in 2024 and even 2025, I'm really not seeing too many people able to itemize deductions. If you are, then this is where you would take that. So it's your state income tax, your property tax or real estate taxes, your charitable contributions, if you have high medical expenses, if those equal higher than the standard deduction for you and your situation, it's single is different. Married, it's like 29,200. So yeah, they're really high, and I'm not seeing people hit those numbers. So they are deductible if you can hit those numbers and be higher than that. All right. Third question, what is the recommendation for paying estimated quarterly taxes with the current year's income is being carefully tracked and is a significant decline from the previous year? So you have to pay in 100% of last year, right? So if your income is dropping, you can actually pay less, right? Because you have to meet 90% of this year or owe less than $1,000 when it comes time to tax time to avoid an underpayment penalty. So that's what we're trying to avoid by paying an estimated taxes. I love when questions kind of all come towards the same thing. We're talking about quarterly estimated taxes. And so, yeah, as long as if your income is declining, then that's okay to pay less as long as you're keeping up with that current year. It's not a problem. The tax preparer we use provided estimated coupons for a set amount based on the tax return, but my client is projecting significantly lower income. So yeah, if your income is dropping, then base it off of your current year income. That's perfectly acceptable. And as a follow-up to last month's question about S-corp distributions, operating agreement spells out where 51 and 49% split among two shareholders. One wants to take a distribution is the requirement that the other shareholder also receive a distribution. And this is absolutely yes. So when you have distributions, you have to distribute the funds evenly according to the ownership percentage. So that is a requirement. As an example, if you have $1,000 of distributions, one has to receive $510 of that, and one has to receive 490. So that is a requirement. And normally how you get around this, if somebody is working more in a business and the other partner or shareholder is not, you can, as an S corp, you can pay the person who's working in the business a fair salary for the hours and what they're doing for the company, and the other person might not get a salary or might get a very small salary. And that's how you would change better. Distributions have to be, everyone has to receive one if one is going to. So I hope that answers that question. If you have follow-up and you happen to be on here, I don't track names when I keep the questions. So if this is your question, feel free to ask some follow-up as well. As a 1099, what is the best way to leverage my LLC to save money on taxes? And how do I save on self-employment tax? So let's go back to the basics here. LLC has nothing to do with taxes. LLC is a legal structure and it's with the state. So the taxable entities are sole proprietor, partnership, S corp, and a C corp. So those are the four taxable entities in general. LLC is not a tax savings method, right? So really depends on. We have to understand also what our self-employment taxes are for. They are for Social Security and Medicare. And when you are self-employed, so when you are a sole proprietor or a partnership, so if you have more than one person in your LLC or a partnership by default, you have to pay your self-employment tax. So you have to pay into Social Security and you have to pay into Medicare, and that is 15.3%. So normally when we're employed by somebody else and receiving a W-2, they help and contribute half of that. So they're paying that 7.65%. And then the other half is coming right out of your paycheck. So a lot of times we don't even think about these taxes, right? Because it's just happening automatically. So when you're self-employed though, right, we have to pay into that. When you start to see higher in net profit for your LLC, so if you're sole proprietor or a partnership, that's when we want to start looking at other avenues for tax savings. And I would love whoever asked this question, this is a great thing for a tax strategy. I do offer tax strategy as a certified tax coach and tax planning. So this is something, every situation is a little unique. So it isn't necessarily one size fits all. And so that's what I recommend booking a tax strategy call to help with that specific situation. But yeah, just to reiterate, an LLC is a legal state structure, not a taxable one. So there's not like a magic way to save on taxes. The other thing when you think about it as you're self-employed, making sure that you're taking all of your available deductions, which will help reduce your self-employment tax. And if you're not sure what those might be, it's really industry specific, but it could be things in software you use, if you use a computer, if you need a camera, any kind of tools or anything used in your business, if you have insurance for the business, not health insurance, but traditional, liability insurance, things like your phone and internet that you need to do the work, and any other things that might be industry specific to your specific work. All right, hope that answers that question. We're kind of getting into similar things here. Again, it's funny how things run into similarities with the questions in a month. How do I pay myself from my LLC if it's taxed as a partnership? So this is a clear, right? So LLC is taxed as a sole proprietor or as a partnership. So this person clearly has multiple people in their LLC. And paying yourself from a partnership is just through distributions. So there's no W-2s. Partners are never issued W-2s. You can have other employees that are W-2 employees, but the partners themselves would never receive W-2s. And so the second part of that is, what form do you fill out to show the IRS that the LLC paid me? So the partnership paid for the work. And this is just filed on your tax return. So partnerships and S corps and even sole proprietors, right? So single member LLC, multi-member LLC, right? You're a sole proprietor or a partnership for tax purposes, or possibly an S corp. And you're taxed on the 100% net profit from the business. So there, it doesn't matter whether you distribute the money, take an owner draw, take a partner distribution. It doesn't matter what you call it. It's you're taxed on 100% of the net profit. So I think this is also a little bit of misunderstanding here. So when it doesn't matter if you're withdrawing the money, right? You're still taxed on it. So when you fill out your partnership tax return, you are going to show distributions and owner draws, right? On that, you can have guaranteed payments. So this is the one unique thing about being a partnership is a partnership can have guaranteed payments for services. And so this would be, let's just say I'm in a partnership and I'm doing a lot of the work. So I'm going to receive $30,000 or something. We'll just make a number for payments for my services. And that is going to show on that partnership return. And then that partnership return produces a K1, which you use on your personal 1040, right? You're using that K1 to those numbers and it's going to show on. So that's how we're reporting to the IRS or to the state if we're getting a guaranteed payment. Otherwise, partnerships and sole proprietors and even S corps are taxed on 100% of the net profit. I hope that clears that up. Again, if you happen to be on here, anyone who's on here, if you have a question, please drop it in the chat. I do have time for some live questions if anybody has anything. The last question that I have is a credit card statement proof as an expense. And generally, I want to say no. You really should have a receipt. And nowadays, a lot of this stuff is electronic, so you can save, PDF and put it into a Dropbox folder or Google Drive or whatever other kind of electronic cloud storage you want to use so that you don't have to lose it. You can also keep it in email. I don't always recommend that because if your business closes or something and you lose that email, you lose all your receipts. So I do like to say like print a PDF copy, print that email or print a PDF. If you go onto like, let's say you use Adobe or something and you have a receipt, you can print that, right? Download a receipt as a PDF. So that's usually credit card statements are not necessarily 100% proof. They can show, hey, the expense happened, but I do recommend always having receipts. That is my personal recommendation. So does anyone have any other questions? Those are the questions I got in advance. I do realize we're in summer. We're in a holiday week for the 4th of July. So people probably aren't thinking about taxes so much. But if you have any questions, I am here live. And if not, then I'm going to close out for the day. And I will say the next one that we have is August 6th. And again, 10 a.m. Mountain Time. So if you're interested, if you have questions, you can also submit them. If I don't have any other live questions, I am gonna sign off for the day and wish you all a great July and happy 4th of July. And hope you are somewhere fun and not too hot. And yeah, thanks for joining me today. And I look forward to seeing you in August. Thanks for being here, Thomas.